If his accountant truly told him, hey, I need you to spend 20K right now, which would be crazy, by the way, and then these were things that he didn't necessarily need, but bought them just for that 6K of savings, he's down 14K.
My accountant called me and said I need to spend $2,000, and a lot of you guys said you wanted calls like that as well, so here's everything you need to know about tax write-offs. At my 9-to-5 job, the taxes are already taken out by the time the paycheck hits my account, but when you own your own business, taxes are not taken out, so you need to set that money aside to pay taxes at the end of the year. So because I have an LLC for my social media, I can do tax write-offs, which is basically a legal loophole that allows your income to seem less than it actually is, which means that
So he's spot on with that, but can we stop calling it a loophole though? Because it ain't. It's working exactly as intended. And yes, if you're doing social media and you're earning income through social media, you are running a for-profit business. Now, whether you're in Canada or in the United States, that constitutes the ability to take tax deductions. No, you do not need to have a corporation to activate these. No, you do not need to have an LLC done in the States to activate these. It's just a letter of the law now that you operate as a business with your creator business. So far so good. Let's bury that loophole term for a lot of this tax stuff because they're not loopholes, man. They're not loopholes. Let's keep going. Good stuff so far.
IRS will take less of your money. So these are hypothetical numbers, but let's just say I make $100,000 from social media this year, and then Uncle Sam comes knocking on my door saying, hey, Rye, we're going to need $30,000 of that for taxes. And that's what I'm going to say. Hold up. Wait a minute. I had to spend over $20,000 in business expenses to keep my business running. In order to make my content, I needed to spend $2,000 on a new phone. I needed to spend $3,000 on a new laptop. I needed to spend $5,000 on flights to meet with other creators and clients to make said content. So now instead of Uncle Sam thinking I made $100,000, he sees the $20,000 in business expenses and now sees that I made $80,000. And again, this math isn't real, but for the purpose of the video, instead of now having to pay $30,000 of taxes based off $100,000, I will now only pay $24,000 worth of taxes based off an $80,000 income while still getting to spend money on things that actually help me support my business.
All right. I like this because nothing he is saying is wrong. Now, what I do want to add, because there's a perspective that I want everybody to be aware of. Now, whether you're running a Canadian or US business, it's the same thing. And here it is. He said he saved about $6,000 in taxes. Now, if those $20,000 of expenses were expenses that were deemed, valuable and important for his operations, as in whether it was for tax savings or not, he would have done them, then he's up $6,000. If his accountant truly told him, hey, I need you to spend 20K right now, which would be crazy, by the way, and then these were things that he didn't necessarily need, but bought them just for that 6K of savings, he's down 14K, right? So I want us all to understand it depends on perspective. It depends on how you're communicating with your CPA, saying, hey, like I want to, at the beginning of the year, you're like, hey, I want to invest in this. I want to increase my marketing spend by this much because I know that this metric is showing me that if I invest this much, I'm going to get this much. Or I want to get equipment because I'm hiring X amount of people. I want them to have laptops and so on so they can create the content on my behalf. Those are all avenues where you're investing and spending on things, but there's a clear goal behind them in terms of operations that will lead to more revenue and more profit. And that's the best scenario where tax write-offs make sense. If you're not doing it for that, you're doing it for the wrong reasons. You could either see yourself as being up $6,000, but if you're truly analytical, if you're truly looking at your starting position and where you are now, you could also see yourself as being down 14,000. So overall though, like VAR ruling on this one, like I agree with Don for the decision. Nothing he said is wrong. Everything here is factually correct. You're able to take advantage of tax write-offs if you run a creator business that is for profit with intent to earn income. And you'll be able to take advantage of tax savings that way. It's just a matter of how you're acquiring them and how your planning goals are. Like, is this to maximize profit, maximize revenue? Is it to acquire a home the next year? So you may not want to have these tax write-offs, right? You may not want to show a low amount of profit. So a lot of factors in, but overall, as far as Rise concerned, didn't say anything wrong. We agree with Don for the decision. And if you guys want to see more videos like this, my name is Ronnie Fogan for meeting for the first time, Canadian and US CPA who helps generate tax savings for content creators. It has been a pleasure. I'll see y'all in the next video.